Welcome, Duncan McIntyre, CEO of AdventureBox. You recently entered a position as the CEO, and you also closed the fourth quarter last week. Can you perhaps start by describing what have happened since you took the position?
Yeah, and thank you, Wilhelm, for having me here. I really appreciate it. Yeah, our Q4 report, as I'm sure you saw, recently came out on February 28th. As you can see from the report, that focus was primarily on AdventureBox's existing business, which is prior to the acquisition of Lion Gaming Group. Since that time, as you said, I've been placed as CEO of AdventureBox, and the acquisition of Lion has been formally completed. Now it is up to us to move the company forward in a new direction.
Yeah. As you said, you have acquired Lion Gaming, which you were the CEO of before, if I'm right. Can you tell us about the company?
Yeah, of course. And yes, as you said, I was the CEO of Lion Gaming Group before I took over as CEO of AdventureBox. So Lion is a B2B company. We built our own proprietary sportsbook, casino studio, risk management system, and essentially we've been operating as a white label business. We've grown and scaled this company since September 2021, and at its height, we had over 80 brands using our software. But we're very excited to be now part of the AdventureBox family.
Yeah. And some people may wonder, I think, what's the ambition with like going forward with AdventureBox, since after the transaction, the Lion Gaming shareholders they control about 95% of AdventureBox also. So it would be interesting to hear what the ambition is with the company.
Thank you, Wilhelm. Yeah, you're absolutely correct. Lion shareholders are now the primary shareholders of AdventureBox, but we are very respectful of the prior existing AdventureBox shareholders, and we're very happy that they remain part of our shareholder base. So AdventureBox, the ambition, we've now been repositioned as a publicly traded gaming venture fund. Our focus is on acquiring companies which satisfy at least two of three criteria. So again, we want these companies to check at least two of these boxes. One, we want these companies to be cash flow positive. As a publicly traded company, we always want to be ensuring that we're growing revenue and our cash flow. Two, these companies must have either a unique platform or product or have a strong presence in high growth regions. And I'll happily explain more of that as you see some of our acquisition pipeline. And lastly, we must believe that these companies have a lot of potential left for growth in their company. Our focus after acquiring these companies is on helping them scale. This can be done by providing them with outside marketing capital for the first time, providing cross-selling opportunities within our portfolio, and the significant cost savings we can provide as a portfolio of aligned assets.
Yeah. Before we jump into the acquisitions more, can you tell us about some financial details on Lion Gaming?
Yeah, I can only state what was revealed in the press releases and in our Q4 report, and that's about 4.5 million euros revenue and about 2.3 million EBITDA.
Yeah. And the planned acquisitions which you have communicated, can you elaborate on the financials in those companies also?
Yes, happily. And if you'll humor me, Wilhelm, I might actually tell you about all of the companies we're looking to acquire. For some of them, the focus isn't necessarily on their financial performance, but rather what we think they can do as part of the portfolio. First, we have RWB Smart Solutions, Inc. I call them RWB, so that's how I'll refer to them. But RWB is both a B2B games aggregator and has its own casino brands. In 2024, RWB did about 20 million US in revenue, and most importantly, about 10 million in EBITDA. They have a unique platform that's focused on the Asia Pacific market, and there's a lot of growth potential left in this asset. We're extremely excited to welcome them into the family. Next, we have the Quantum Group of companies. Quantum is a marketing and affiliate engine and has its own B2C brands. In 2024, the Quantum Group of companies did approximately 12.5 million euros in revenue and 4.8 million in EBITDA. Again, there's lots of room yet left for growth as everything in Quantum has been internally funded. Next, we have Block Sports. Block is a blockchain-based betting exchange. This is an extremely unique product that we can cross-sell within our portfolio. If you think about it, we have our own casino brands. Many of them have sportsbooks. Now we can add a betting exchange to all of these brands. Next, we have Sparks Technology. This is a media company with tier one clients such as Disney, ESPN, and Turner Sports. Sparks is primarily a player engagement tool, which we will be using for player acquisition and player loyalty. So not only is Sparks going to drive growth for our own brands, but it will also retain its own B2B segment outside of the Adventure Box portfolio. Lastly, we have Zephyr Media. Zephyr Media has a unique sportsbook, which has processed over $1 billion in turnover. Most importantly, and perhaps selfishly for me, they have an amazing management team, which is going to immediately be complementary to Adventure Box's management team. These guys have a wealth of experience all over the world. They've built publicly traded companies and they've built massive casino brands. So we're very excited to welcome them. Together, all of these assets bring over 40 million in 2024 revenue, over 15 million in EBITDA, plus unique platforms, which we're very excited to bring into the family.
Very interesting, Duncan. Two follow-up questions on that. First of all, do you plan to incorporate all the businesses together, or are they planned to be independent going forward? And secondly, can you give us some details on the how you plan to finance the acquisitions?
Yes, thank you, Bill. That's actually a wonderful question. The first one that I'm very glad you asked. Sometimes in previous companies I've been a part of that pursued a similar roll-up strategy, groups tried to synergize and turn everything into one platform, which I don't necessarily think is the way to go. These assets are going to be operated as standalone companies. They're already cash flow positive and have high growth trajectory. What we're trying to do is accelerate that growth and increase their revenue. So these assets will operate as standalone companies focused on their specific jurisdictions. And what we're going to do is simply provide them more fuel to add to their growing fire. So we'll give them access to cross-selling opportunities, outside marketing capital, which they've not previously had, and cost savings where we can apply that. As for financing these acquisitions, as you can see, the focus really is on cash flow positive assets. So what we would like to do is be very respectful of our existing shareholder base and minimize dilution where possible. So our focus is definitely on debt financing for these acquisitions, since we are extremely confident that the existing cash flow can easily satisfy any debt payments. So that really is our plan. I'm sure there will be some equity fundraisers in the future, but the focus is primarily on the debt markets for us.
Yeah. And what does the timeline look like going forward? When do you plan to finalize the acquisitions?
I'm very aggressive, as you can see in some of the press releases we put out announcing these letters of intent. We'd like to close these acquisitions in early Q2, so the time is coming quickly.
Yeah. And to the question that I think everyone are thinking about is, why did you decide to sort of go public, even though it's not a RTO? Why did you go through a Swedish company since you're Canadian?
It's a wonderful question and a fun question for me to answer. As much as I'm Canadian and perhaps North American centric, and we may believe that North America is the home of gaming, the reality is it's not. Gaming still flows through Europe, and I would argue that Sweden is perhaps the home of it. So since our strategy is focused on M&A transactions, we need a quality acquisition pipeline. We think being based here in Sweden will increase our deal flow of quality assets. So that's the first reason. The second reason is Sweden has a very mature investor audience which understands this space. Investors in Sweden are able to differentiate between a B2C focused entity, a B2B focused entity, and a roll-up strategy such as ours, where we're focused on acquiring really intriguing assets.
Yeah. And lastly, since you're kind of building a new company, if I may say so. What would you like to send as a message to potential investors seeking an investment in AdventureBox?
For potential investors seeking investment in AdventureBox, you now have a unique opportunity to get exposure to a broad range of assets. Each of these assets will have their own updates to the market. They'll all have newsworthy content to share, and shareholders will hear from the executives of each of these companies, introducing new thought leaders to the space. So investing in AdventureBox will give you direct access to each of these assets and their future growth.
Sounds promising, Duncan. Thank you for participating and answering the questions.
Thank you very much, Roland.